on and talk a little bit more about Oil India. We want to understand a little bit more about the new gas deals in the pipeline, the synergies from the newly acquired wells, and what the outlook is when it comes to the RE segment. Ranjit Rath is the CMD now joining in. Thank you so much for taking time out. Given that, I'll start off with the broader context of where we're at because crude oil prices have settled around $75. What's your sense as to where they could potentially be headed and how long do you believe that it'll be around this level?
First of all, thank you very much for having me and good morning to you and all your audiences. Uh, to us, the best part is it is offering us a stability. So we are looking forward to, while we are, aligned to fluctuations in crude oil prices, but given the kind of stability or the degree of volatility coming to a stable norm, we are pretty comfortable to see through the year.
All right. Hi, Ranjit. This is Shrishti also joining in. A very good morning. But do you think that the oil prices will stay below that $75 per barrel mark? And if yes, then for how long?
I wish I could forecast to stay. Good morning to you. We would always kind of plan our our investments, but that's the way we would look forward to having it stable on that particular bracket.
Ranjit, if we talk about some of the other companies, then yes, ONGC has guided for a 20% premium on the gas prices for new wells. But what is the status of Oil India on that? And also, your earnings are 20% premium on the new wells. Any take on that information?
See, that's a very innovative way of kind of encouraging to undertake enhanced exploration and production for the nominated fields which Government of India has created. And the way you have picked up, ONGC has already done. The similar exercise for Oil India is also underway. The submissions of, there is a process where we submit our new gas pertaining to particular principle of accounting. And very soon we are expecting a revert from the ministry with that identification or mapping of new gas with the premium pricing on top of it.
Okay. Now, given that gas prices are at the upper end of the ceiling, how profitable is the gas business and what is the average cost of production?
I would say that, since Oil India primarily currently producing from the nominated fields, and we are looking forward to, of course, I'll talk about it. From a nomination point of view, nomination field point of view, 6.5 gives us good amount of headroom to undertake our enhanced exploration. As far as the price freedom is concerned, we have got a discovered small field in Bakri Tibba, that's in Rajasthan, which we are planning to undertake the monetization route. And we have also kind of initiated the auctioning process for that. So we will wait and watch for that particular price point.
Okay, point taken. So that's the view coming in as far as, the overall sector and the demand is concerned. But I just also wanted a better take from you regarding this latest, legislation which has been passed in the country, and that's of course the Oil Fields Regulation and Development Amendment Bill 2024, which has been passed by the Rajya Sabha. How does that benefit Oil India? Is that a game changer at all, or is it just going to be procedural in nature? What's your take?
I'll tell you, it's a path-breaking reform which Government of India has taken on. The intent is, given the fact that now we have about 1 million square kilometer of no-go zone, which was earlier locked up, the EEZ of eastern and western offshore of India, the deep and ultra-deep sedimentary basins, that will get a fillip through this particular amendment that we are forcing, because this is primarily to focus on two things. One is this will ensure ease of doing business in terms of international oil companies or national oil companies of overseas will find it encouraging to look at India as an investment destination. And the other part of the amendment, I would say, is the amendment also identifies a mechanism for unitization. Because normally when we do acreage mapping, we have boundaries, but the reservoirs does not have any boundary subsurface. So unitization is another such facets which will be also very, very beneficial in identifying the reserves and then the potential thereof. So from an Oil India perspective, this will no more be considered as a mining activity. It is an oil and gas and a distinctly different operation. B, it will encourage IOCs and NOCs to look at the exploration landscape of the country. And C, which is very specific to Oil India, we would have more opportunity to have collaborations with IOCs and NOCs for technology transfer, for risk sharing, and taking up our focused attention to the deep and ultra deep exploration.
Ranjit, if we talk about Singapore GRMs, then those have been stable around that $6 per barrel mark. This should result into significant uptick in the Numaligarh refinery numbers, right, in Q3. And how much is like $1 per barrel rise in GRM benefit Numaligarh's EBITDA per PAT? Any sense on that?
I will not be able to offer exact numbers, but one thing which I can tell you in terms of our refining capacity, we are doing fairly well this last Q2, and I can assure you that Q3 and Q4, our GRMs will be improved with the higher plant load capacity.
We were hoping to get a bit more, kind of number around it, but I get your sense that you can't talk too much around it. But any plans for NRL IPO at some point of time? Because that's something as well which has been talked about.
No, I'm not sure when did we talk about. Since currently we are in the final leg of the expansion plan from 3 to 9. Our expansion plan is underway, so no such IPO discussion as we speak.
Expansion plans there? How much could it add to, say, your top line, your production, your profitability?
See, when we get scale in refining capacity, it would add definitely to the top line. And given the kind of focused attention in terms of the market that is available today to the refined products, be it MS, HSD and ATF per se, we see there will be serious value addition to the entire portfolio of Oil India Limited.
Now, given that post the Q2 call, you reiterated your oil and gas production targets, the long-term targets were given, but do you think that they are actually achievable? Will you be revising them? Any time frame that you can put to this?
See, normally when we have some kind of an target, it is always aspirational. That's number one. Number two, we would always work towards that aspiration. And that has been displayed in last 2 years in the form of highest ever production of crude oil, highest ever production since inception in terms of natural gas, highest ever exploratory and development drilling, 61 in an year from on 45 and 38 in previous 2 years, highest ever workover, enhanced production interventions which are underway. And this year also we foresee to scale up more. I mean, if everything goes all right, probably we will also record better performances this year. The Q4 is about another 100 days to go. Now, with this kind of a construct, I would also like to say that we do a lot of reservoir management because the field that we manage, we not only drill deeper or deep dive, we also manage the reservoir to maintain its producibility. So with all this, while there is a pressure decline rate of about 10%, on top of 10%, we have been registering a growth of about 6%. So we are hopeful of scripting the same story this year.
Okay, fair enough. And having said that, then what is it that the projection is over the next 2 to 3 years when it comes to your revenues, when it comes to your net profit? What is the number that you would put to it?
I would talk about our production target in terms of our physical growth. We are looking at 3.6 to 3.9 and 4 million ton in terms of crude oil throughput and about 5 BCM of natural gas, which is currently bit constrained because of non-availability of evacuation infrastructure. But going forward, when we will have the IGGL, that is Indradhanu gas grid, which is primarily the Northeast gas grid, getting connected to the national gas grid, we will be able to enhance our natural gas production. And one more thing that would also happen with enhanced natural gas production, we will have more crude oil also, because natural gas and crude oil in some cases they're associated. So that way we are looking forward to the evacuation infrastructure. Normally I would refrain in giving some financials because that is the derivative of the international crude oil price. As far as physical growth is concerned, we are well paced on our trajectory.
Ranjit, if you can give us an update on the Mozambique oil fields, like when are the operations expected to start?
We are having continuous discussions with the operator, which is Total Energy. And as we understand, the ground situation in Mozambique has been on the improvisation curve. The deployment of Total is increasing there. And Total is also now looking at reconfirming with the lenders for the enhanced cost, which is a natural because of the force majeure. So it's a matter of time when the operator would announce about invocation of the force majeure to commencement of the groundwork. So we are in constant touch. We had meetings with the CEO Total. So we are hopeful of resumption of the work.
Of resumption of work, but we are also hopeful that the Indradhanush gas grid phase 1 would be commenced by December itself. Any update there or any initial sense on the volumes?
You were talking about the Northeast gas grid?
The Indradhanush gas grid phase 1?
Yes, the phase 1 is primarily, mechanically it was supposed to be completed by December this year. It might get delayed a bit, but I do not have the exact numbers. What is going to happen is this will connect availability of natural gas or flowing of natural gas from northeastern part of the country to the CGDs across the country. And also, should there be a deficit in terms of more industries coming up, so it will ensure a free flow of natural gas. From an Oil India point of view, I must reiterate here that Numaligarh, once it is expanded from 3 million ton to 9 million ton, we would also require enhanced natural gas. So from current 1 million standard cubic meter per day, it would go to about 3 million standard cubic meter per day. So while every effort will be there to provide natural gas from the northeastern part of the country to Numaligarh, this connectivity would help us to secure RLNG should there be a need from the mainland.
All right, and also Ranjit, if we track some of your past performances, then over the past 5 years, your average dividend payout has come down to 23% versus 48% in the previous 5 years. So, how do you see how should investors see this going forward? And also, Ranjit, if you can help us with your take, like, are there any buyback plans that could be in, because the company has not announced those since 2018?
No, just to get it corrected, are you sure about the numbers? Because every year we see, as a public sector undertaking, we are supposed to meet the guideline of 30% of the, that we meet. So I'm not very sure about your numbers on that 28% or so. So we will continue to be meeting the government guidelines of dividend payout, that's for sure. And considering the fact that we have lined up huge capex in terms of our exploration efforts, and as we speak, we are also undertaking exploration in the Andaman Nicobar offshore waters. Plus, we have lined up multiple number of wells, both exploratory and development wells, about 70 plus for year and this year and next year as well. What was the second question?
Any buyback plans that are in place? Because since 2018, we haven't seen company doing it any of those?
Okay. No, you would kindly note that this year we have just completed the issuance of bonus shares. So therefore, no buyback plan is under discussion right now.
Thanks so much for making time and speaking with us and detailing out all that's happening at Oil India at this point of time.
If you like this video, then like, share and subscribe to ET Now.